A last hour fall saw the Nifty and Sensex lose 0.5% ahead of monthly expiry. Nifty slips below 26,000. Nearly 40 Nifty stocks end in the red. Broader markets were mildly better.
Real estate companies could see labor cost increase by 10 to 15% due to the new labor codes. Gig workers get legal recognition, and platform companies could see limited short-term financial impact. 50 lakh IT sector employees likely to see reduction in their in-hand salary, but cost to the companies remains unchanged.
40% GST rate will deter Royal Enfield from investing in bigger motorcycles, says company CEO Govind Rajan. Plans to adopt a startup mentality to minimize the GST impact. Doubles down on exports and plans to ramp up capacity. That's an exclusive. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Sonal Bhutra and with me is my colleague Vivek Iyer. Vivek, good afternoon. What a fall in the last couple of trading minutes itself. We ended at the day's low almost at that level below the 26,000 mark and 108 points lower on the Nifty as well. Nifty IT was the sole gainer in trade, but we did have 40 Nifty stocks trading in the red. Tomorrow is the monthly expiry, so we'll watch out for big moves on the Nifty tomorrow as well. But the advanced decline ratio in the favor of declines 1:3. So basically for every one stock in the green, there were 3 stocks in the red today, where the Bank Nifty would mildly outperform the benchmarks. But the mid caps, again, down 0.4%.
That's right. Good afternoon, Sonal. And as you can see on your screen, that crisscross line clearly in favor of the declines, clearly indicating why we had such negative market breadth and why we had so much of selling pressure, especially in the second part of the session. What didn't do so well today and what dragged the market? Well, it was the entire defense pack and the PSU bank, some negative news flow regarding HAL, and you saw the defense pack under a lot of pressure. But we have a lot lined up on the show. So let's see what we have in store for you today. We'll start off with the top movers and shakers of the day with Hormuz Fatakia. India implements new labor codes. We break down the impact of the real estate sector and the gig economy. HAL fell in trade after its Tejas aircraft crashed at the Dubai Air Show. Finally, we take stock of the key market events to watch out for during tomorrow's trading session. Now on to our first segment of the day. Hormuz joins in from the big wall, the top movers and shakers of the day. Hormuz, over to you.
Well, the Nifty may have ended at the lowest point of the day, but the bigger talking point was the pressure in the broader markets, and there were sectors that were leading this fall. Real estate was one of them, and barring one, all of the stocks on the Nifty Realty Index ended with losses today. And take a look at those losses. Anantraj was down 6.5%. Most of the other names also trading with losses of anywhere between 2 to 3% in today's trading session. The other sector that was sulking today was the defense space, and almost every defense name, Garden Reach was down almost 4, Zen Technologies, BDL, Data Patterns, all of them seeing losses of anywhere between 2 to 4% in today's session as well. If defense PSUs were declining, the other PSUs, the non-defense names, were not too far behind either, with NHPC, BHEL, almost all other names on the Nifty PSE index also were down and out in today's trading session. Also, stocks that are at a 52-week low in today's trade from the broader markets. You take a look at Tarson's Products, Exicom Tele, Oswal Pumps, Rain Industries are at 52-week low, a 6% fall in today's trade. And lastly, stocks that bucked the trend in today's trading session. We spoke about VLS Finance and closing bell, but Aztec Life Sciences as well. Sonal put the spotlight on that in the morning and in our Under the Lens segment. Muthoot Micro, Karnataka Bank continued to move higher as well. So these were some names that bucked the trend, but overall a disappointing day for the markets.
No doubt about that. Disappointing for the bulls. Thank you, Hormuz, for joining us with that list as always. Let's take this discussion forward. We are now joined by Sudeep Bandopadhyay, Group Chairman at IndiTrade Capital, and Jay Thakkar, Head of Derivatives and Quant Research at ICICI Securities. Gentlemen, good afternoon. Thank you so much for joining in. Sudeep, what are the markets factoring in? We did have an indication from GIFT Nifty for a decent start. IT Pack did well. Bank supported at a point in time as well. What do you think was the cause of nervousness in the markets?
Well, I think it's got to do primarily with the expiry tomorrow. And, there are a lot of things happened during the last hour, half an hour to an hour. And this is definitely because of the expiry. Of course, the market already is factoring in some favorable announcement on US-India trade deal, sometimes during this week itself. And that's a big announcement. I hope it does come because a lot of it is already factored in by the market. There was a bit of nervousness on this new labor code notification on real estate as well as some of these platform companies because they will have some immediate impact, definitely. Long term, it's positive, but short to medium term, there will be some impact on their profitability. And, it depends on how much they can pass on to the consumers, whether they can pass on or not. We'll have to wait and watch that. By and large, I think the market overall, I don't see much negative. Of course, we'll have to very carefully monitor what's happening in the US, particularly the trade deal, as well as US Fed decision on 10th of December.
Well, thank you so much, Sudeep. But I request both gentlemen to stay on. We have quite a few interesting stocks that we want to discuss. Jay, okay, let me come across to you first. 26,000 appears to be that particular level that the Nifty is struggling to go past. Do you feel that the Nifty can scale it in the next attempt, or do you see further downside from the current levels?
Good afternoon to you, Vivek and Sonal. See, today was the MSCI rejig as well. I mean, closed today, right? Semi-annual one. So, generally you have this kind of moment, during, whether it is FTSE rebalancing or maybe, MSCI rejig or rebalancing as well. And 26,000 breaking, closing below those levels, not much. It's just few points below 26,000. So if at all Nifty manages to reclaim those levels tomorrow, Vivek, then yes, there is a good chance that Nifty probably thereafter could continue its upward journey. But failing to surpass 26,000, stay about 26,000 on the day of the monthly expiry, Vivek, then I think the probability of a downside would be there, at least on the expiry day. I don't see a much bigger downside as well. I think that 25,750, 800, where the monthly VWAP is, that would act as a support. So, by and large, I think not more than 1.25 kind of percentage kind of a move. That is 300 points range of Nifty could be there. 25,750 to 26,000. And if those levels get taken off, then probably 26,100 to probably 25,900. But if you ask me that will 26,000 will be taken off or not, so I would say that the only chance for that will be if there is a good support again from Bank Nifty and Nifty IT. So today IT was well up more than 1% or so. And it gave up its gains. Most of the IT stocks gave up their gains, and the Bank Nifty as well. I mean, HDFC was struggling around 1,000 levels again. So most of the banking names have good call base at their 1,000 levels on HDFC, 1,000 levels on SBI, all of that. So if these critical levels don't take off tomorrow, if 59,000 levels of Bank Nifty doesn't get taken off tomorrow, then 26,000 will be difficult. Else, if there is a good support from Nifty Bank and Nifty IT, then as 26,000 again can be reclaimed.
Take that point, Jay. Thank you so much for explaining to us those levels. Let's get stock specific now. HAL was the stock on our radar, fell over 2% after its light combat aircraft Tejas crashed at the Dubai Air Show, resulting in the death of a pilot. This is the second Tejas crash in the last 20 months. Let's get in Riya Bhatia. She's joining in with what this would mean for the company. And Riya, also tell us what is the management saying about this incident?
Well, yes, HAL has remained under pressure today, down around 3 to 3.5% after an LCA Mark 1A aircraft crashed at the Dubai Air Show on the 21st of November. Now, the exact cause of the accident remains unknown and investigations are underway, which is what the company has highlighted. And it is important to note that this is the second LCA Mark 1A aircraft crash in the last 20 months, and the earlier incident had occurred in Rajasthan in March of last year. Now, on the back of this, Elara has also penned out a note on HAL. They have maintained their buy rating on the stock, saying that they do not expect any material impact from this crash, and they've also highlighted that fighter aircraft crashes are not uncommon, and there have been more than 7 incidents in calendar year 25 alone from several different jets that have been manufactured from different companies. Now, in terms of the expected impact, they have said that they are not expecting news of the crash to have any major financial impact on the current order book, inflows or execution of the company. However, there may be some delays faced in exports by the company, but however, the stock was still down around 3.5% in trade.
Well, thank you so much, Riya, for joining in and giving us all the details as far as HAL and why that particular stock was in focus today. Well, moving on, Swiggy and Zomato were in focus after the center implemented the new labor code, which formally recognizes gig workers for social security benefits. Mangalam Malu is here with what it means for the gig economy and how these new laws will impact the sector. Mangalam, over to you.
Well, they will see an impact, but the important part is for all the platform companies which do employ gig workers, gig workers and platform workers being recognized under the Social Security Act for the first time is a positive. And platforms must contribute about 1 to 2% of their annual turnover, which is capped at 5% for gig worker payouts. The Social Security is an important parameter to watch out for. We saw a decline in Eternal and Swiggy's prices earlier in the morning as the stock price is concerned, but thereafter there has been a recovery. Why is that? Because despite a near-term disruption, there's actually going to be a long-term positive for all these platform companies because it actually codifies and simplifies labor laws and importantly also ensures that there is a steady supply of gig workers too. The benefits will be rolled out via state welfare boards and government schemes. Now, Eternal and Swiggy on their part, what we understand from analysts is already provide for health insurance to riders, which amounts to anywhere between 0.7 to 1% of their overall GMV. Now, if the mandate as it provides 2% of sales, the incremental hit could be 150 to 200 crore as far as the GMV is concerned. Now, how much does that amount to overall? Would be no more than 1 to 2 rupees, at best 3 rupees per order that may, the analysts believe, be passed on to the consumer over and above the 10 to 13 rupees that these companies charge as platform fees itself. So a temporary disruption, an increase of 2 to 3 rupees per order, but this is a long-term positive as far as supply for gig workers and platform workers is concerned. On its part, the companies have said that they welcome the government's proposals on gig worker safety, but they will await the final notification before assessing materiality. The street has assessed the materiality. They've seen a temporary hit, which is why the stocks were lower. But because this is a long-term positive, the stocks have recovered. And remember, these companies are all fairly cash-rich.
Okay, all right, take that point. Thank you so much for explaining that to us, Mangalam. Let's also understand how these new labor laws could impact the real estate space because do remember, it is a labor-heavy industry and a lot of their costs come in from labor itself. Now, it is around 15 to 30% of the overall cost, depending on which city you are. If you're in Mumbai, the land cost will be more than the labor cost. So, the impact of this could be lesser in Mumbai, but more in other cities, the likes of Hyderabad, Kolkata, etc. Cost of land, labor costs are around 20 to 25% of the total construction cost for any developer. We did speak to some experts and they indicated that labor costs can increase by 10 to 15% because of this change, and overall cost, and from the development cost, it could be an increase of 3 to 4%. If that happens, the developers will pass it on to the buyers because they do not have enough strength in the balance sheet to take it upon themselves. They will not charge it to the PNL as well. So this could be detrimental to the buyers overall. Knight Frank said that there is a shortage of labor, which is a big issue for the industry. So if new labor laws come, they will solve this issue. However, the industry will still take a year to implement these new laws properly. But of course, there's a lot of clarity required otherwise as well, right? For implementation and execution. Becoming compliant is one of them, which could take another year, and that is something that the street is watching out for. But if it does happen, this could be the impact for buyers and developers.
Well, thank you so much for explaining that. The execution timeline as well as the cost to the eventual home buyer is something that we will keep a track on. Well, Sudeep, you heard both Mangalam as well as Sonal explain the impact both for the gig economy, companies like Zomato as well as Swiggy, and also the impact on the realty pack. Especially, when you're coming to the new age companies like Eternal as well as Swiggy, what is your view? Do you feel that they would be able to easily pass on these added costs to the customers?
They will be. They will be definitely able to pass on. It's a temporary disruption as far as these platform companies are concerned. But in the medium to long term, they will be able to pass on the cost. And this will be actually a positive for these companies because this brings stability and certainty on the labor laws and gig worker engagement. So that's a positive. There may be some challenge on certain other segments of the platform business, which is like urban clap. I think their main so all the services are provided through contract laborers and gig workers, and in that case, the cost to the customer will increase. It's an extremely competitive space, and I'll be watching what happens as far as that particular space is concerned. There may be some impact on the manpower companies as well, and we need to watch that, whether it's TeamLease or some other competitors of TeamLease. We'll have to watch that space. As far as real estate is concerned, I'm reasonably sure that these will be passed on to the consumers, and the way their real estate demand is currently shaping up across the country, I think it will get absorbed. there will be some disruption for the next couple of quarters once the rules are notified. But beyond that, I think this will be passed on to the consumers definitely.
Okay, all right. Jay, have you looked at any of these stocks from a technical viewpoint? Something that stands out, real estate or these gig worker, Zomato or Swiggy for that matter?
Sure, no, Sonasi, most of the realty names had witnessed good short covering earlier this series, but then, coming to the later part of the series, or maybe, the second part of the series, second half of the series, we again saw the short getting built up in most of this realty names. So the overall trend was down in Nifty Realty, and that was one of the underperformers, Sonal, if I would say, as far as Nifty is concerned, and Nifty components are concerned. So the biggest underperformer so far has been Nifty IT, and which was followed up by Nifty Realty thereafter. Nifty Realty did see some short covering, but then again the stocks have started to give up, and we have again seen stocks getting short build up. So my view in the short term for Nifty Realty names, most of them is sideways to negative right now. So one would be avoiding, or one should be avoiding this. And as far as Zomato is concerned, that's also one of the stock which is there in the F&O segment. I would say that this stock last month in the October series had technically formed a shooting star pattern, which is bearish reversal pattern as far as the candlestick pattern is concerned. And from a derivative perspective, we have seen short build up here too. So there are a lot of shorts built on Zomato, as well as technical setup seems to be negative in the short term because of the reversal from the overbought territory. So I think the stock can still slip further till the levels of 280. That is where one can find a support on Zomato. So the short term outlook is negative, and there are a lot of shorts out here as well. Probably there could be short rollover here from November to December series as well.
Well, thank you so much, Jay, for joining us and giving us a sense both on the realty names, which you say continue to remain under pressure, and Swiggy or Zomato is the name where you may look to add on dips. But moving on, there was an IPO rush on Dalal Street in 2025. Let's take a look at the public offers, where retail shareholding allocation exceeded SEBI's 35% minimum requirement, and yet all of them are now trading below their issue price. Hormaz Fatakia is here with more details.
This interesting analysis from Prime Database, NSE, and of course our own CNBC-TV18 analysis. It's 6 issues. The normal minimum requirement for retail shareholder quota in an IPO, of course, is 35%. But for certain companies that are loss-making, that can go down to 10, as evident from the recent listings as well. But we've listed out 6 companies here where the retail shareholder quota was more than 35%. And all 6 of them are trading below their issue price. Now, highway infrastructure is one of them. Here the retail quota was 40%. Now at 70 rupees a share, this IPO received bumper subscription at 130 crore IPO issue size. The IPO was subscribed almost 300 times. The retail shareholder portion too was subscribed over 150 times during the bidding process. But despite this bumper subscription, as of Friday's close, the stock is down 5% from its issue price. Now the other one is Patel Retail, where the retail shareholder quota was 45%. And this too received bumper subscription. The issue was subscribed almost 96 times. The retail shareholding was subscribed well over 40 times as well compared to the shares on offer. That stock too, despite this subscription, was down 8% from its issue price as of last Friday's closing. Now during this IPO frenzy between August and September, there were 3 IPOs that came out almost at the same time, and all of them were in the news from the fall that they saw from the issue price right from the time of listing. BMW Ventures is one such example. Here the retail quota was the highest at 75%. The issue saw subdued response. In fact, the retail portion, which had the maximum reservation, was not even fully subscribed. It was subscribed only 99%. And as of Friday's close, the stock was down almost 30% from its IPO price. Now, the other one, of course, was Om Freight Forwarders. Here too, and here the retail quota was 47%. The IPO saw subdued subscription. The retail portion somehow managed to see full subscription. But even after this, the stock as of Friday's closing was down around 32% when compared to its issue price. The second last one on this list is Glottis, and this one is where the retail shareholders have had the biggest loss. The retail quota here was 40% for a 307 crore IPO. Subdued response to its IPO as well. The retail portion saw subscription of somewhere around about 1.5 times. But as of Friday's closing, the stock was almost down 50% from its issue price. And lastly, VMS TMT, where the retail quota was around 50%. Here too, the subscription was bumper. The retail portion was subscribed close to 48 times. And despite this, the stock is down well over 35% as of Friday's closing. So higher subscription to IPOs or a higher retail quota may not necessarily translate into better returns. These stocks are proof of that.
All right, Hormuz, thank you so much for joining in with all those important details. And we would also like to thank our guests, Sudeep and Jeff, for joining today with their fundamental and technical analysis. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get to the top corporate voices along with the key market events to watch out for on the other side.
Welcome back to Market Forward. Well, it's now time to shift our focus to all the big corporate voices of the day. SIS Group Enterprises Management told CNBC-TV18 that the company welcomes the implementation of the much-awaited labour code, calling it a major positive for the company. The management said that the reform will act as a revenue and margin kicker for their company, especially given the large disparity in minimum wages across India.
And India's largest derivative exchange, MCX's top boss, Praveena Rai, told CNBC-TV18 that the company is growing quickly. Addressing the October technical glitch, she said that the root cause analysis they knew the problem within a day or two. They added that the whole system was put through a testing to be able to identify any other threshold parameters. Also said that the goalpost at MCX was to do a 10 billion orders per day mark.
Well, now on to a CNBC-TV18 exclusive. Royal Enfield plans to launch its first electric bike by April next year. CNBC-TV18's Parikshit Luthra caught up with the company's CEO, B. Govindarajan, on the streets of Goa to take stock of the brand's 125-year-old legacy and India's plans. Govindarajan said that the 40% GST rate will deter Royal Enfield from investing in bigger motorcycles. He also said that the bike maker plans to adopt a startup mentality to minimize the GST impact while it doubles down on exports.
The higher cc motorcycles, the era is slightly going off. I don't think people are really enjoying. If given a chance, even I won't enjoy that sort of a bigger motorcycles. And I want a motorcycle which has to be interacting with me. And I control the motorcycle and I enjoy the motorcycle. And that's why we said middleweight, Rashid, is what we will focus as a company. And the middleweight, our definition is 250cc to 750cc motorcycle. And currently we have 350cc, 450cc, 650cc platform. And I do believe strongly that even this market can grow because premiumization in India is the thing. And we are by far the motorcycles which is very accessible price point which we have brought in and gorgeous looking motorcycles and everybody is loving. And I do see there is a good growth even in this platform which we can bring in for future.
All right, that's the word coming in from Royal Enfield. And before we wrap on this show, we bring you some key market events to watch out for. Ria is standing by with the key events to focus for tomorrow. Ria.
Well, yes, Sonal, let's take a look at the events to watch out for tomorrow. First up in the US, we have the core retail sales, the PPI data, as well as the consumer confidence data coming out. Back home in India, watch out for the IPO of Sudeep Pharma, which closes tomorrow. Also watch out for Go Digit General Insurance, for which the lock-in period ends tomorrow. Enviro Infra will also be in focus since they will be holding a board meeting to consider a fundraise tomorrow. And lastly, the China International Semiconductor Expo will conclude in Beijing on the 25th of November.
Well, thank you so much, Ria. We'll definitely keep our eye out for all of these events that are expected to transpire in tomorrow's trading session. But with that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side.